All right, we're live. It's just that simple, Mason.
Wow. I
We
love the
were
internet.
there was a moment in time when we were not live, and now we are live. Um, I'm just looking. Yep, looks like we're live. I'm gonna repost myself, right? Sounds weird, but sometimes that's important.
Same here. Give us a moment if you're here already so we can share this from our accounts.
Yeah, we are sharing the Mason Carter from Acropolis on Bitcoin Treasury companies. Up there it is. Mason Carter liked your post. Should be my post. Well, welcome everybody. Um, my name's Tim Kotzman. I have a show called the Bitcoin Treasuries Podcast. And more and more lately, we're doing some live streams. I think it's kind of a cool, different kind of vibe where, right, we're not going to edit out any of the ums or ahs. And uh, I like what you said before we started streaming, Mason. If we can just have a conversation that we'd have anyways, kind of, right, for a meeting up at a coffee shop or for an adult beverage or two, then like just kind of a state of like where are we? But of course, starting with your background, like to where you are now as co-founder of Acropolis and principal at Early Riders. Yeah, where did you come from? Where are you going? Have you ever been called Cotton Eye Joe? What? Tell us a little bit about yourself.
Well, I am from Texas, so we'll start there. So maybe I have been called Cotton Eye Joe at least a couple of times in my life. But yeah, we're gonna make this more casual than the typical podcast that Tim does or the podcast that we do at Acropolis. I think we're almost at 50 episodes. So if you want the super polished, into the weeds analysis and Bitcoin Treasury Alpha, then go there. But this will be more casual. So I'll tell y'all a little bit about myself, how I got into Bitcoin, and then how I came to co-founding Acropolis. So I got into Bitcoin when I was a teenager, actually in 2017, and I thought it was really cool because I had these prior experiences growing up. I grew up lower income, don't have an inheritance coming my way or anything like that. And once, when I was 11 years old, my parents had our only bank account frozen by a creditor that they had owed money to at least 5 years in the past. So they came in and they froze our only bank account. We had one account and one debit card. And I remember that sticking with me so strongly. Like, what do you mean they froze our money? What do you mean we can't buy gas or buy bread? We had to go figure out how to hire a lawyer and get ourselves out of this trouble. And that really stuck with me. So when I discovered Bitcoin, a few years later, I was like, wow, there's this money that no one can come in and freeze. No one can just pull if they feel like it, or all the reasons why we like Bitcoin. So I started buying it and researching it. Luckily, got into my shitcoin phase early. I was a naive teenager and fell for the XRPs of the world and all the different ICO scams in 2017. But luckily, I put the most of my little capital that I had back then into Bitcoin and never sold it. Even to this day, I've never sold any meaningful amount of Bitcoin, which I'm really proud of. But back then, which now is markedly different, but back then you had folks like Larry Fink, Warren Buffett, Jamie Dimon saying that it was a pet rock, rat poison, only for criminals. And I'm looking at these guys like, they're the financial titans of our life. So maybe I'm wrong. Maybe I don't understand this Bitcoin thing. So no one in my family had went to college. I went to college and studied finance really to confirm my thesis in Bitcoin. So went to Texas Tech University out in West Texas, had some different internships at Dell Technologies, which is now interesting, but obviously back then there was no Bitcoin related talk about Dell. Um, did an internship in commercial real estate as well as traditional equity management. And by the end of it, I didn't think that there was a company that I wanted to join that was Bitcoin only, that was going to stand the test of time. But I still wanted to put myself in some sort of adjacent position where I can advocate for Bitcoin or work on Bitcoin products or projects. So I ended up joining eBay, where I joined a program called the Finance Futures Program. It was 5 of us every year, or 5 people are accepted every year, and you sort of get a lot of freedom to rotate through different areas of the business, learn a lot. You have access to the C-suite, access to other executives, and freedom to work on projects. So I took that freedom to work on Bitcoin. I spent 3 years at eBay and did everything I could to advocate for eBay or for Bitcoin within the firm, whether that's from we actually built a test product to allow sellers to get paid in Bitcoin. The idea was there's only 3 ways to acquire Bitcoin. You can either mine it, or you can use your disposable income, or you can sell your old stuff for it. And the third way, there's really no solution at scale that would allow you to do that. So we worked on that. Ultimately, eBay decided to focus on other digital projects like NFTs, which I wasn't so happy about. And then I shifted my focus on advocating for it from a balance sheet perspective. So I joined the Treasury team after I finished up with my program, and after probably 6 months of just being the Bitcoin guy and advocating within the team, really no one took me seriously. And it was unfortunate because I thought it was such a great opportunity for eBay to recapitalize and to take a business that still makes a lot of money. eBay is a very, very healthy company, makes about, and these are just rough numbers, about 10 billion in revenue and about 3 billion in profit. So it basically prints money and they have to figure out what to do with it. But at that time, there also really wasn't a great solution for the custody aspect of it, because we all know what happens when you leave Bitcoin with a single point of failure, or you end up leaving it at Mt. Gox, or leaving it at Celsius or FTX or BlockFi, or even in the TradFi world, you leave it with Lehman, the trusted firm on Wall Street. And I always like to say, regardless of whether the firm is Bitcoin native or TradFi, or if it's been around for 5 years or 150 years, you don't want to leave a digital bearer asset um, in that way. And then your next logical step might be, how do we self custody as a corporation? Which, when you start thinking about the idea of these publicly traded companies using hardware devices and seed phrases to store the firms and the shareholders' Bitcoin, it just doesn't make a lot of sense. And I would consult with the CFO of eBay and teach him about Bitcoin. And one of our meetings, I came in with some ledgers to show him, how you can be fully self-sovereign and hold your own keys and have your own Bitcoin that you're fully responsible for. And he literally laughed at me and was like, "How much money do you have on these things?" And I said, "Sir, probably more than I'm comfortable with sharing, or you'd be comfortable with knowing." And that really just, it made me think that there's not a firm that can help other firms adopt Bitcoin treasuries in a safe way. And again, the most important piece of that was the custody aspect of it. So then I became familiar with OnRamp's multi-institution custody model, which I'm sure folks who follow you are aware. But just in case you're not, it's the best of both worlds, where instead of leaving all of your Bitcoin with an exchange or a single point of failure, or custodying it all yourself with hardware devices and seed phrases, you combine the best of both worlds. So it's Bitcoin native multi-sig, where each of the signers in the quorum is an institutional grade custodian. So in our case, it's BitGo, OnRamp, and CoinCover out of the UK. And this allows companies to get actual Bitcoin exposure on chain, verifiable, not in an omnibus account, not pooled with hundreds of other companies. But at the end of the day, like I said, it's combining the best of both worlds. So we saw that solution, or I saw that solution, ended up leaving eBay, joining Early Riders, which is the Bitcoin-denominated venture fund. In our eyes, we still think it's the only one on earth that is actually operating with Bitcoin as the hurdle rate. So we raise from LPs, deploy to portfolio companies, and in the future will return to LPs in Bitcoin. And everything that we do is denominated in Bitcoin. And we're sitting together with Michael Tanguma, Brian Kubelis, and the partners at Early Riders, thinking about what's the first company that we want to, incubate in this Early Riders ecosystem. And it was, back when the Bitcoin Treasury trend wasn't as trendy as it is now, but we're still very early. So we ended up launching Acropolis ahead of Nashville, the Bitcoin 2024 conference, and we provide all sorts of services on top of just custody, whether it's accumulation planning, accounting support, investor relations support. If you want to go to the capital markets and raise debt and equity in order to buy more Bitcoin, we support that as well as other things. I don't want to make this just like a giant Acropolis advertisement. But yeah, so, and then we were working with smaller companies in the beginning, and we've since moved to mid to large size privates and even some publics now. So we're chugging along, and I know that was really long, but hopefully that was a good overall view into my journey and how we got here today.
Yeah, I'm sure folks appreciate that. Um, so when you say early riders is Bitcoin denominated, does that mean everything kind of sits on the balance sheet at early riders as Bitcoin, and then it's only deployed out of Bitcoin as necessary for the opportunities for the portfolio companies or whatever you want to call them, and then it comes back as Bitcoin as well? Or can you walk us through that a little bit?
Correct. So all of the companies within the Early Riders portfolio have Bitcoin treasuries. I mean, of course, we have bank accounts for you to do operating expenses and to run the business, but the vast majority of the capital needs to sit in Bitcoin because we see Bitcoin as the hurdle rate. And we've been saying this for a long time, even before that was as trendy as it is now. But we fundamentally want each and every portfolio company to measure every decision against the performance of Bitcoin. So whether that's going on a marketing campaign or hiring your next guy or girl, or whatever it may be, it needs to be measured against Bitcoin because the fund itself will not make any money until we clear Bitcoin as the hurdle rate. So we won't be taking any fees if our investments don't return more than Bitcoin would have over that period. So yes, we do. We raise from LPs in Bitcoin. We do accept dollars, but then we just immediately buy Bitcoin with those dollars. And then yeah, it's all Bitcoin denominated, Bitcoin deployed. And the portfolio companies right now are exclusively Bitcoin companies, but they don't need to be in the future. They can be, companies with strong fundamentals that follow our guidelines. I mean, we sort of have a few core pillars of our fund. It's doing more with less. It's using Bitcoin as the hurdle rate. The fact that Bitcoin is going to change capital stacks, and a few others. So we sort of send those across the portfolio and operate in that way.
And can you describe what the ideal project would look like that early riders might want to dig deeper on to potentially look to invest in? Is it like, is the ideal company focused on Bitcoin and then going out from there, just to put guardrails on it if people are listening and they're working on a project, to not waste anyone's time and be like, is this something that you guys would like to look at? Um, yeah, any guardrails around that, or
Yeah,
details?
we're almost value investors. But it's funny, like a value investor would say, "No way! Like you guys are a Bitcoin firm. How could you possibly say you're value investors?" But really, you're never going to see early riders, investing in Bitcoin mining on the moon or all the different L2s that there are. It's more, and it's funny, I always use that example. I feel like I've been using that example for at least a year. And then we actually had a deck get sent that was Bitcoin mining on the moon. So that's actually a company that exists. I would shout them out, but I forgot the name. But we're mostly focused on, you know, basic Bitcoin infrastructure companies at the moment. So OnRamp is sort of the crown jewel of the portfolio. It's that multi-institution custody that I mentioned. And then we have Acropolis, so corporate Bitcoin Treasury solution. We also have Flash, which is a Bitcoin payments company, allowing businesses to onboard and use it for cross-border payments and customer payments. And then the other portfolio company that's public right now is OnRamp Mina. So essentially doing the same thing, but applying it with a Bitcoiner first principles approach from the Middle East. So yeah, I think that about sums it up. It's mostly Bitcoin infrastructure, sort of boring things, but the things that are completely necessary for the asset to scale into $100+ trillion, because fundamentally, I don't think hardware devices and seed phrases will scale to 100+ trillion. Now, don't get me wrong. Sometimes I get misconstrued. That's great for a sovereign individual. But if we're talking countries, companies, states, cities, funds, like it's not a sustainable solution. So that's another core pillar of the portfolio.
Got it. If someone has a project and they want to reach out to you and send you their slide deck that does not have to do with mining Bitcoin on the moon, where should they send it?
Yeah, feel free to message me directly. My messages are open, or you can also send an email to mason@earlywriters.com.
Got it. When I spoke with Chase last week, we he kind of walked through some of the realities of the conversations of what you're having there, kind of the good, the bad, the ugly. Um, do you have any takes from your seat as far as like are a lot of the conversations about cross-border payments or employee benefits or an actual Bitcoin treasury strategy or and what other conversations are you having and are they just kind of one-off like people asking if they can put Dogecoin on their balance sheet or other interesting examples or what's the day-to-day been like over the past maybe 3 to 6 months since we're sitting here in the middle of June?
Yeah, let's see where to start. So I think primarily the interest that we're seeing is just they want the Bitcoin expert to sit over their shoulder and help them develop a plan, everything from custody to accumulation to how do we talk to our employees about this. So really, and then there's of course a lot that are interested in the accretive financing and a lot that are interested in specific portions of it. But really, it's just we're getting back to the basics with a lot of the clients that we work with, because I would say a lot of our clients understand enough about Bitcoin to know that they want exposure for their firm, but not enough to understand how Bitcoin is different than Ethereum, why Ethereum is not a treasury asset, or why is Bitcoin not bad for the environment, or why is Bitcoin not only used for criminals. So a lot of times we're getting to the basics, but I think a strong take I want to talk about today is the fact that I do not believe that Bitcoin treasury companies are a bubble. I think that idea is already just a popular narrative that people want to say to sound smart. Um, and at the end of the day, a lot of companies that adopt a Bitcoin treasury strategy are going to fail, but it has nothing to do with Bitcoin and more to do with how they are careful and how they are taking this strategy seriously and not over leveraging. And, a lot of the times we have to be the people, even though Acropolis stores all of our treasury in Bitcoin and we're all Bitcoin maximalist, everyone that works at the firm, are all Bitcoin only. A lot of the times we have to come in and say, because of the industry that you're in, you need more capital in case of an emergency. And if there's a drawdown, we don't want to have you as a forced seller of Bitcoin at the bottom. So a lot of times we have to come in and say, hey, let's actually tamp this down just a bit. We're still going to put as much of the current cash position or current asset position into Bitcoin as we can. We want to smartly leverage certain assets that you might have. But at the end of the day, we're pretty conservative. We want all Acropolis clients to last forever. We want everyone who works with Acropolis to be able to withstand any downturn and also see the upside of this network that's still just 2 trillion. So that's a lot of the conversations we have. And it's really hard to convince me that we're in a bubble when there's tens of thousands of companies that are all using dollars and pounds and all the different currencies around the world. And they all have investments in treasuries and, equity stakes in other companies. And still, I think we're at, correct me if I'm wrong, but maybe 75 public companies that are doing this. As long as, they're not, they're buying real Bitcoin. They're not going through these custodial risks that we talked about earlier. I'm not concerned about the Bitcoin treasury bubble actually being a bubble. I think it's a new paradigm. I think a lot of people would have said that the internet was a bubble, and it did end up having a .com style crash, but now 20 years later, every company on earth is an internet company, just like every company is a media company. And we believe that everyone will end up being a Bitcoin company because it's fundamentally a better way to store shareholder value, to grow shareholder value, to remit payments around the world, and all of the other reasons why we love Bitcoin. So I think that that'll be my strong take for the day. We are not in a bubble, and we're far from it.
What's your take on Cardano and Polkadot and maybe others coming out over the past few days, and the founder of Cardano, at least, like literally saying on video that they're going to be selling their tokens to build a Bitcoin treasury? Like what does that say about where we are in the adoption and really, right, other digital securities most of the time now saying that they want to build a Bitcoin treasury? Like, was that on your bingo card? And what's your take on it?
Yeah, to me, that just shows you the desperation that the altcoins are in right now. But really, it's nothing different than they've been doing this entire time, because they're constantly just trying to convince people. And what drives me the most crazy is XRP, because I feel like XRP was, I mentioned it earlier, I went through my shitcoin phase early, and XRP was one of those tokens that I bought in 2017 along with Bitcoin. And if you compare the performance over the last 3 months, 6 months, yeah, it might be up a couple 100%. But if you price it in Bitcoin over the last 8, 9 years, it's down 99.5%. And the only way that Ripple or XRP ever gets into the market is by them selling it. So, just follow what they do, right? They're not buying their own tokens. They're not actually making progress with working with the banks, right? Like everyone who's an XRP head talks about how it'll be the ledger that every bank uses and all this nonsense and hoopla. But at the end of the day, Bitcoin is the only one that's being adopted. It's the only one that the market is actually demanding. It's the only one with a credible neutrality. It's the only one that's able to actually enforce the 21 million fixed supply. It's the only one that's viable for a treasury asset. So it makes sense if these shitcoins want to be around for another 5 years. Not that I want them to. They're going to have to acquire more Bitcoin, and it's just funny that they're doing it so publicly instead of rather slyly now. But yeah, it's the same thing that's always happened. Every altcoin trader, every alternative to Bitcoin is just at the end of the day trying to get more Bitcoin. So, maybe they're like all the clients that we work with. Maybe they need to call Acropolis and see how they can acquire more Bitcoin, but I'd rather not work with them.
Yeah. Um, any reaction to Michael Saylor being appointed as an advisor to the country of Pakistan as a Bitcoin and crypto advisor? I mean, what does that say about where we are? Maybe nation states are taking this more seriously and maybe on a more expedited schedule than what we had thought, or no?
I love it. I just saw this news before joining the stream, so I haven't been able to dig into it too much in terms of what his actual role is. But this was what Saylor set out to do when he stepped down as CEO of MicroStrategy at the time, and then wanted to focus on helping take this strategy to other companies, and it seems like other countries. So, and it's all good for him, right? I mean, you could see it as a selfless endeavor in that you're helping Pakistan and the people of Pakistan capitalize their country and, survive and have the same advantage that the United States will eventually have with a strategic Bitcoin reserve. But I mean, I think it's bullish. I love it. I love to see Saylor doing it, and like I said, it is selfish. It is selfless and selfish, but that's okay because really that's what we're all here for, right? I mean, Bitcoin has a lot of collateral positive effects that we're all very passionate about, but at the end of the day, we all at least came into the space for number go up, and Saylor is definitely incentivized to help that happen with almost 600,000 Bitcoin on the company balance sheet at this point, and I'm sure at least a few dozen thousand for him personally.
Yeah. I mean, it reminds me of one, everything's good for Bitcoin, and it's going to take all of us. And it also kind of underscores almost a feeling for me of like an El Salvador, where it's not going to be, one of the bigger capital markets that's, you know, kind of signaling this kind of stuff first, although, of course, the United States has.
How
Um,
cool would that be, though? I mean, how cool would it be for Pakistan to become a tourist destination that's beautiful and has a giant Bitcoin treasury? I mean, I'm sure a lot of the folks that are watching and listening to this are aware of El Salvador, but they were the most dangerous country, I believe, in the Southern Hemisphere. I think they were called the murder capital of the world, and
mhm.
now they've cut that by 99%. Bukele has a 90% approval rating. And everyone that I know that's been to El Salvador says it's beautiful. I've spoke to people that are from there, and they've said that the difference is night and day. You've got big American tech companies like Google setting up shop there. And overall, I mean, it's great for the people. It's great for the people of El Salvador. It's great for the area. It's great for Bitcoin adoption in countries because you can see a case study in what happened that this country, for this country that went all in on Bitcoin. I would love to see that for Pakistan. I'm sure it's a beautiful place that's, had a lot of issues and, troubles over the last 20 years. A lot of it due to our U.S. involvement and the tension around the region. But I would love to see Pakistan and every country around the world thriving and not doing what Germany did. I mean, Germany already is down, I don't know how many billions from selling around 50K or whatever the price was. But yeah, the more positive stories of countries buying Bitcoin and negative stories of countries that had Bitcoin and squandered it um, is great. I love to see it.
Yeah. At the risk of getting into a price prediction sort of conversation, what's your take on where we are in the cycle and how, the age old statement, this time is different, right? Maybe it is, maybe it's not. But I mean, I hear a lot of very well respected people in the industry, such as Adam Beck and Samson Mao and others, saying, like, this is where the steep part of the S curve kicks in, and we're going to $1 million. And then I have conversations with other very well respected people in the industry, and they're like, look, you might have 6 months left, right? we're going to 150,000 and that's it. Um, is there a way to approach this question from like a macro and a cycles, but adding in corporates and nation states point of view without it just becoming like a like very non-productive price prediction conversation?
Right. Yeah, I mean, I've been through a few cycles at this point in Bitcoin, and I'm not even going to hedge my bets. I do think that this time is different. I really do think that the days of long Bitcoin bear markets are more than likely over. And that's not to say that along the way we won't have 30-40% drops that scares the hell out of everybody. And everyone, if you're the Bitcoiner in your friend group or family group, then you're going to get calls of, should I have sold? Is it over? But when you have this demand from all the Bitcoin treasury companies, the countries, nation states, cities, funds, pensions, I mean, we could go down for the next 5 minutes of all the different entities that are acquiring Bitcoin. They're interested in Bitcoin and they need Bitcoin. I fundamentally think it is different this time. I I hope I'm wrong. I hope that we have more of a chance to personally buy Bitcoin and capitalize our companies with Bitcoin. But my favorite Bitcoin book is Parker Lewis's Gradually Then Suddenly. I think that is how Bitcoin adoption will happen. I think we can argue over when that suddenly moment is. I think if you would have asked me 5 years ago, it would have been closer to 10 years from today. But I think in the next 5 years, I mean, I know, Tim, you're calling for 1 million Bitcoin this year. I'm a bit more conservative for this year. I think we end up in the 200s or 300s. I think I've said 221 before. But when you have so much Bitcoin getting sucked up every day, yet you only have a nominal amount being produced every day, I mean, Strategy just over the weekend, without even selling a share, was able to buy another 10,000 Bitcoin. It took Metaplanet a whole year to get to 10,000 Bitcoin. And of course, they're accelerating. But when you're dealing with Bitcoin that only has 21 million, and that's always like the most basic thing. I hate to bring up 21 million, but it really is the most important thing. It sounds like a lot, but it's not. And when you have, I haven't even mentioned ETFs. Um,
A
I haven't even
lot of
mentioned
action. A lot of
I haven't
action.
even mentioned the whole tariff thing and how the United States is sort of realizing that we don't want to be the global reserve currency anymore. We've always just uh, received real products and services, real goods from around the world for the money that we just print. I think the general public is starting to catch on because they're realizing, wow, in the last 5 years, everything is way more expensive. And this inflation thing that they said was going to be transitory is still here. And I'm getting poorer and poorer. And the people who have assets are getting richer and richer. I think that suddenly moment has to be coming soon. I mean, I'm not going to say that it's coming this year or next year, but I think in the next 5 years that top just sort of breaks loose and we go to 1 million. And once we're at 1 million, I don't know who said this, but they were tweeting. They were saying, if it goes to 1 million, then why wouldn't it go to two? If it goes to two, then why wouldn't it go to four?
Yeah.
And I mean that makes sense to me. So I think the cycles are over. Long story short.
Yeah. I mean, I try to think about how many people know about Bitcoin, understand Bitcoin, appreciate Bitcoin, and then have bought Bitcoin, right? Those
Right.
four things. But then you layer on top of it an equity like strategy. But then you layer on top of that not just strategy, the common stock equity, but the three preferreds. And the reason I bring it up is um, I think over 90% of the capital that was raised over the past week was from STRD, Stride, which has only been in existence for like a couple of weeks. So, what does that say about not to use the meme word accelerate, but if you have a product that strategy literally created with AI And now, call it a month in, it's raising almost $1 billion a week, or at least it's shown that over the past week,
Mm.
to just buy, as you said, 10,000 Bitcoin, which is as much as Metaplanet has total. I mean, doesn't that kind of, well, and let me layer this on. Metaplanet has come out and publicly said they're targeting 1% of the Bitcoin supply, right? 210,000 Bitcoin. Um, a few days ago, Alexander Lise was on a space that he publicly said they're targeting for the blockchain group 1% of the Bitcoin supply. Like, how many capital markets are there? Are we going to see one or several pop up in all these different global capital markets? And how many of them need to just target 1% of the Bitcoin supply before things kind of really, I mean, where do things go at that point? I mean, am I just kind of saying the same thing, or what's your take?
Yeah, there's only one way to go from there. And what let's see, strategies at 3%. Metaplanet wants to get to 1. The blockchain group wants to get to 1. There's 5. We only got 95 left. We have a certain percentage that are lost. We have a certain percentage that are locked up in ETFs. That's a few percent. So there's only one way to go from here, Tim. I mean, I hope your tie is extra long right now because that's that's how I'm feeling. I mean, eventually the supply is going to catch up, and I'm surprised that we're still at what 108,000. I mean, even that seems low to me. And I would love for all these companies to get to 1%, but the reality is they're not going to be able to. So the next best option is to just focus on having a healthy business, put as much capital as you can on a reoccurring basis into it, try to diversify whatever you have now in terms of assets into it, and just try to get as much as you can. I mean, people always ask me, Mason, should I be buying, like friends and family, should I be buying Bitcoin right now, even though it's six figures? And I'm saying, of course, because once it's 200, once it's 300, 4, then the amount that you're going to get for the dollars that are becoming infinitely worthless, if that even makes sense, are going to get you less Bitcoin. So luckily, it's divisible by 100 million Satoshis, and you can buy as much as you want or as little as you want. And that's the great thing about Bitcoin is if your strategy and you want to go all in and by tens of billions in order to save your company from, as Saylor put it, dying a slow and miserable death. I really enjoyed his interview with Jordan Peterson. At this point, I try to only listen to Bitcoin content that is outside of my echo chamber so I can hear the different perspective from someone like Jordan. And yeah, the only way we go is up from here, Tim.
Bullish.
Bullish.
So, can you walk us through how many different strategies there are? Meaning, you can just buy Bitcoin, put it on your balance sheet out of your cash flows, and just be a a company with a Bitcoin treasury. You could also kind of do the MicroStrategy playbook and really engage the capital markets and be aggressive in the way that we've seen the meta planets and the strategies do it. Are there other strategies other than those two? Um, and is there an answer or like a potential explanation in the kind of more conservative approach of, hey, we're just going to put some Bitcoin on the balance sheet. We believe in it, but we're not going to be like really engaging the capital markets in an aggressive way. Is there an answer somewhere in those two categories or between the two when it comes to GameStop having billions of dollars in cash, but only deploying 500 million so far? And I'm not trying to pick on GameStop, but more trying to come from a place of trying to understand um, what these different strategies are and you know trying to just wrap my mind around what they're right like you're not going to figure out what someone's motives are if they're not willing to tell you publicly, but just that there are different strategies and there's not one size fits all necessarily. Is that a fair way to put it?
Yeah, definitely. I think it's all a matter of education and risk tolerance. I think there's an infinite amount of ways that you can slice a Bitcoin treasury strategy, whether it's 1% all the way up to 100%, depending on how healthy the business is. I mean, very rarely would an Acropolis client put 100% of their cash and assets into Bitcoin, but it really just depends. I mean, it seems like the golden rule in that the more that you learn about Bitcoin, the more that you really get deep into the weeds, understand why it was formed, like how it works, what the future of the asset is, why it's, pulling capital from all these different markets and equities and bonds and real estate and other currencies and gold and art and collectibles. The more you learn, the more educated you become, the more that you want to buy Bitcoin, the more you want to be allocated. And you can really see it in the sense of urgency. Some of the clients that come to us, they want to have allocated like yesterday. They're really worried about, am I going to miss it? Am I going to miss it? And that just shows you how much they know about it. We have some clients that are more conservative. They say, hey, an advisor of mine told me to look into it. I've been hearing about it on CNBC. But ultimately, the more educated they become, the more allocation they want. And we're really lucky to have our chief investment officer, Glenn Cameron. He's got 30 years of finance experience, CPAs, worked with pensions, and been an investment consultant, was actually responsible for the first pension fund out of the UK to get a Bitcoin allocation. So he sits with our clients and really comes up with on a case by case basis how we can acquire as much Bitcoin as we can, or how we can sort of get as much juice out of the squeeze. And again, while still remaining conservative, still remaining safe, whether that's you have a business that makes $5 million a month and it's as guaranteed as it could be because their contracts or their relationships that you've had for a decade plus, or if you're sitting on a capital asset like a building that's worth $100 million and you want to figure out how you can pull out 10 or 20 or 30 million and put that into Bitcoin for a long-term treasury asset. It really is like there's an infinite amount of possibilities. I mean, we work with smaller private businesses, public businesses, businesses that are extremely, extremely orange pilled to just slightly. So it really depends. I mean, and also different structures, LLCs, corporates. We have clients that have different businesses and different Bitcoin holdings under the different businesses, and they're trying to just get as much value as they can over the next decade because they see this as the Bitcoin gold rush. But yeah, it's the answer is there's an infinite number of possibilities.
Can you share what the range, the rough range is of allocation of cash to Bitcoin for clients? Is it like all the way down from like just a couple basis points all the way up to over 50%? Or obviously, I'm just grabbing numbers out of thin air.
Yeah, it really is all the way. I would say as low as a percent to as high as 70% if it's a very well capitalized business that doesn't have a lot of debt, is in a good position, like I said, to be safe. But again, and we really, really like to emphasize this because there's gonna be companies that blow up along the way because they get over levered, they're forced sellers at the bottom. And I really want to make this clear that this is an issue of education and position sizing and risk and over leveraging rather than a Bitcoin issue. And yeah, so it's everywhere from 1% to as high as 75%.
Have you had any conversations or questions leading to conversations from clients or prospects around the communications and more so media side of it? Because I know that you mentioned like employee relations, but um, there's kind of this joke right now that every Bitcoin treasury company needs like two people, one to shill whatever's going on, and the other one to like check on the keys every 6 months. And of course, that's probably not entirely accurate, but like, what's your take on like the opportunity here, right? Because people probably are looking for opportunities, looking for jobs in the space, um, and companies are probably trying to figure out how, especially if they're a public company, right, how to message out. And one quick anecdote. Yeah, I was on a call maybe a few months ago with a private company, and I said, if I can be helpful on the media side, let me know. And they're like, oh, we're not in a place yet where we want to be public about this at all, right? We're a small private company. We just don't want to rock the boat. We love Bitcoin. We're stacking Bitcoin, but we don't even want to message that publicly yet. So like, what's the range of all of this, and what have any conversations been like at Acropolis around that?
That's also the range that we see internally, but the position that we like to take, if they do want to go external, they do want to, you know, a steak and shake is a good example in that they've gone very public. They're accepting Bitcoin at all of their locations, and they're trying to, they were at the conference. They're really trying to engage within the community in order to drive more sales, have more brand recognition, and sort of like ride the Bitcoin Treasury wave. But the advice that we always give is you need to put your money where your mouth is, for lack of a better word, and you need to actually be invested in the ideals of Bitcoin and not just doing it for a quick press release, and not just doing it so you can take the Bitcoin and immediately convert it into dollars, because Bitcoiners are often very intelligent, and they can sniff out a affinity scammer or a grifter just trying to do it for publicity, which is not a position that you want to be in. And we mentioned GameStop, and they sort of didn't go about this the right way, in my opinion. We are not working with GameStop. Full transparency. I wish we were, because we would have told them not to. I mean, we saw the clip with Cohen, and he was like, "Yeah, if this Bitcoin thing is right, then we'll be happy because we have some Bitcoin." And they're very, inconspicuous about what the other dollars that they've raised are being used for. And they're paying the price right now because GameStop is being punished, because everyone sort of assumed that they were going to go all in, and they were going to really be orange pilled and really understand the value proposition of Bitcoin and what it is, more than just doing it for a headline. So we always preach, if you're going to publicly talk about Bitcoin, if you're going to do the podcast route, if you're going to, we're happy to have you on our show, happy to introduce you to guys like Tim and have you on his show. But if you're going to do it, it has to be legitimate. It has to be, coming from the heart, which it sounds like it's, like woo woo, but really Bitcoiners can sniff this out from a mile away. And it's important also, not just from a public standpoint, but from an internal standpoint as well. Because not everyone at your company is going to understand Bitcoin. I mean, it's almost a guarantee that you're going to have employees and executives that go, "Hey, whoa, whoa, whoa! I mean, is this? Are we sure?" They're going to think, because you have to think about it from their perspective. They work and they rely on your company to make a living, most likely. And
Mhm.
if they're scared that the company is, investing in an internet token that they don't really know anything about, but they've heard it's bad for the environment and only used for criminals, and going to be banned one day, then you have to take preemptive steps to educate them and say, "Hey, this is not a gamble. This is not our company going to Vegas and playing blackjack. This is us actually trying to ensure that we don't have to lay you off one day, trying to ensure that we don't have to constantly spin our wheels and figure out how to grow and go and acquire companies that will more than likely end up failing for, if it's not a culture fit, or if it's not a technical fit, or, for several reasons. You have to educate your internal team. So we help with that as well. We present to executives, we present to broader teams if we can get everyone in one Zoom meeting and sort of explain the basics of Bitcoin and why it's actually something that you should be advocating for as an employee. And then last thing I'll say on this topic is we don't have a lot of clients doing it right now, but we do offer the ability, we call it restricted Bitcoin units, to allow your employees to have a Bitcoin incentive plan. So instead of RSUs, giving your employees a certain amount of stock in order to stay for a certain period of time, the idea is you would give them a Bitcoin balance and say, if you stay for example, if you stay for 4 years, then this Bitcoin is going to belong to you, which is beneficial for a lot of reasons. It's beneficial if it's a publicly traded company and the stock doesn't perform so well and it's mostly just going down. Employees don't love that. If it's a private company and it's not actually listed on any exchange, unless you sell to a private party, it's not a liquid asset. There's other tax things that you have to think about in that scenario as well. And then the company is having to constantly issue new shares and dilute itself in order to attract talent. And let's say an employee stays for 4 years, then that's great. You got the employee for 4 years, they get their Bitcoin, they can sell it, they can keep it. It's much better than an RSU. And then from the company's perspective, if the employee ends up leaving, then they just get to keep the Bitcoin that they would have given to them. So it's an interesting product that, like I said, we're not doing it with too many companies right now, but I think in the future, that is where most employee incentive programs will move. They will move to Bitcoin because Bitcoin is always liquid. Bitcoin is acceptable everywhere. You're not needing to wait to be acquired or to be publicly listed. And it's a great incentive. It's a great incentive to get an employee to stay.
No, I love that. And it's one of those things where you kind of wonder, do business owners, even if they are Bitcoiners, are they even aware that these things exist? Which is where hopefully it's helpful to have these conversations. Um, okay. What are some of the most common questions or hesitations from clients kind of ahead of them pulling the trigger? Like they're either a Bitcoiner or like they want to kind of move forward with the strategy, but what are their trip points? What are they getting hung up on um, along the way most
Probably the
often?
most common one is one of the most basic ones, and it's just why Bitcoin and not everything else. Because
Mm,
this idea of a diversified basket of assets is something that's deeply ingrained in society. You pretty much see it everywhere. It's always, got to diversify. Don't put all your eggs in one basket. And we're here telling you not to diversify and to put all your eggs into this Bitcoin basket. The more important basket to worry about not putting all your eggs into is the custody solution. So you don't want to be leaving all of your Bitcoin with an exchange. So we definitely take that approach. Yeah, we get a lot of questions about why just Bitcoin, what makes Bitcoin different. Um, a lot of questions on quantum computing. That seems to be a pretty common question. People think, well, I heard that once quantum computing comes out, then Bitcoin is done for. So is that something that we should be thinking about? And maybe we can just talk about it here. I think quantum
sure.
computing is not a threat to Bitcoin. There are people like Adam Back that answer this question much better than I can, by the way. So I'm sort of just parroting a lot of what people like Adam say. But quantum computing is still a long ways away in terms of actually becoming a threat. And then if you think about the things that are threatened by quantum computing, essentially everything else on Earth will be hacked before Bitcoin is hacked. And Bitcoin is built in a way that if there is a existential threat to the protocol, then it can be changed. It can be upgraded. So once quantum actually becomes a threat, it's actually starting to crack other systems, then the Bitcoin network will come together and say, hey, we need to change the hashing algorithm or the way that the protocol works in a minor way in order to be quantum resistant. And then they will implement that new quantum resistant hashing function. And again, I'm not technical, so I'm not explaining this in the perfect way. And then the protocol will upgrade. Everyone will agree that this is necessary for Bitcoin to continue. And then there will be quantum resistant Bitcoin and we can all move on. It's not, it's something that the media likes to talk about a lot, especially with AI, and we are definitely accelerating in terms of technological advancement. And I'm glad that people are thinking about it, but in reality, it's not a threat to Bitcoin in the near term. And even if it was, then we can upgrade the protocol and make it quantum resistant.
Got it. Got it. I think that's a great kind of every person overview because there's just different audiences, right? Like someone might be a huge fan of Broken Money by Lynn Alden, but it's a pretty thick book, right? And then
Yeah.
someone else might be a big fan of The Big Print by Larry Lepard, right? More kind of approachable. I've had friends of mine say they've given it to their mom and she like really enjoyed it. Not that moms can't enjoy Broken Money by Lynn Alden, but just different audiences, right? People, whether it's the depth of the book or the approach, right? I mean, I love to read books, but don't often actually read the pages because I'm more of a visual auditory learner. So
Mm-hmm.
uh, I guess lots of good ebooks out there as well. But
But I forgot to mention the other question I should have. This is probably the second most common is the volatility. The
okay,
volatility scares the hell out of people. They just, you know, the United States Federal Reserve and central banks around the world have done everything they can to remove volatility from our lives. They want things to be smooth sailing at all times. Things get hot, they try to bring it down. Things get cold, they try to bring it up. And they see that, yes, Bitcoin is volatile. It goes from 20 to 70 and back down to 15. It goes, to over 100 and then down to 75 and now back over 100 again. But at the end of the day, again, this is just more of an issue of education. Because if you can see that over any 4-year period, anyone who's held Bitcoin is in the green. That the volatility is more an issue of position sizing rather than the asset itself. The notion that a bubble is something that goes up very high and then pops and goes down below where it was and never goes back up, where Bitcoin is sort of this swing and it goes down and then settles higher and then goes up and then goes down and then settles higher. So it's fundamentally not a bubble. And the volatility is more towards the upside than it is the downside. So would you rather hold on to the stable US dollar that loses value ever increasingly quickly? Or do you want to hold capital as much as you can into this asset that is volatile in the short term, but over the long term, there's way more to the upside? So volatility is another thing. And that's, again, where we come into play and we say, look, we understand that that's a major concern, which is why we try to prevent you from being a forced seller at the bottom, from getting in over your skis, doing too much. So yeah, volatility is another thing that we deal with a lot, and we deal with it so much that we actually put together a Bitcoin misconceptions playbook of the most common misconceptions that we get that we can just send to clients. It's I'm looking at it here. So it's the most common misconceptions. These are not what I believe, but what we wrote to essentially debunk. Bitcoin has no use case. Bitcoin is too volatile. Bitcoin is backed by nothing. You can't touch it, so Bitcoin is not real. I'm too late to Bitcoin, and Bitcoin is bad for the environment. Those are the most common misconceptions. And yeah, if anyone wants to check out that playbook, you just go to acropolistreasury.com/playbooks. But yeah, and this is all, and again, I want to make it clear, we're not shaming anyone. Where, everyone was a beginner at one point. Everyone didn't understand these things, and we are more than patient and more than happy to help explain internally and externally, because again, at the end of the day, education is how we get to, $100+ trillion asset as well as secure custody.
Makes sense. Um, on the point of I'm too late to Bitcoin, which could lend itself to the conversation of like Bitcoin versus Satoshis and like the unit bias of, well, I can't buy a whole Bitcoin, but I could buy a whole one of something else. um, do you think these Bitcoin treasury companies, these public companies that are starting at smaller market caps where you can go and literally buy the stock for whatever it is, $1, $5, $10, and it has that upside because it's levered in the cases where it's levered Bitcoin. I've heard people say, "Oh, before I say this is not financial advice," but it's like, "Oh, it's an easy 10x or something like that." And again, trying again not to necessarily frame it as like a speculative or trading sort of um, activity, but I mean, investing, right? If you're going to actively invest, it may make sense to really research and see like how far out on the risk curve are you, all of those things. But do you think it's helpful to have some of these things in the market to help the unit bias and maybe bring people in through a different channel, or how do you think about that? I'll also, like, David Bailey there's a clip of him going around. He basically said, look, for a long time, one of the easiest ways to make 100x was in uh, tokens that were calling themselves commodities, but they were, tokens that were pretending not to be securities. And now we're just using securities and kind of treating them like tokens. um, so yeah, what's your feedback to all of that? Because it's right. It's like, well, it's all on Bitcoin. And as you've said, not every single one of these companies are going to um, do really well. It's a different part of all of these things are different styles and amounts of risk. And I think the True North guys, hopefully myself, and even Saylor, David Bailey, go down the list. They've all said like buy Bitcoin, right? Like we buy Bitcoin and then we talk about this other stuff. But yeah, what are your thoughts on any of that?
Yeah, I'm sort of indifferent to the idea of keeping it as Bitcoin, where when you view a million satoshis, it's 0.01 versus, when you go to pay for something, it shows in a different format. Like I think the market will decide that, and it's not something that we can just declare in the market. But to the notion of being too late to Bitcoin, I mean, I would argue that you're too late to the other assets. When the famous chart that Jesse Myers is known for, the all of the different assets, and you can see that I think the updated version it has it at 1 quadrillion. If you add up all the assets around the world, it's 1 quadrillion or 1,000 trillion, and you've got real estate with like 350 trillion, and you've got bonds with 300 trillion, and like to me, I think we should be asking more often, are we too late to real estate? But nobody asks that question. And yet you've got money at over 100 trillion. You've got equities at over 100 trillion. Gold is now, I think, 23, 4, 5 trillion. I haven't looked. And Bitcoin is still just this little tiny dot of 2 trillion. And we can have a separate argument about how it's a better way to store value than real estate, bonds, money, equities, art, gold, collectibles. And I mean, of course, everyone's always too late to Bitcoin. You always wish you could acquire more, but at the end of the day, as we go on, and Bitcoin is, when Bitcoin's $1 million a coin, the average person, the average company will never be able to touch stacks that people are able to touch today. So it will always feel like you're too late. But if you zoom out and you look at the bigger picture, it's not at all. I mean, it's less than 0.2% of the global financial landscape, and it's quickly getting bigger and bigger. People are always looking, like we mentioned, the unit bias. People see 100,000 and they don't realize that you can buy, $5. Even my mom. I was talking to my mom this weekend, and she didn't know that you didn't have to buy one whole Bitcoin. And I'm like, Mom, come on, I founded a Bitcoin company. Like, you should know this. But in reality, it's very unknown. And the more that companies realize that you can buy whatever is suitable for your size, and you can get that benefit in proportion, whether your strategy or if you're a bakery, you can still, like, yes, you're not going to make billions in dollar terms, but you're still going to proportionally benefit based off of your size business. So the sooner that you realize that everything else is melting and it's a less efficient way to store capital, and people like Saylor are trying to take the capital from bonds and trying to take the capital from equities and put it into Bitcoin, then yeah, I mean, I'm just like Sailor. I'm always buying at the top. I'm buying every hour. I'm getting paid in Bitcoin. Any money that I get, I put it into Bitcoin. So, and I'm not too late. But yeah, we're still very early. You're not too late to Bitcoin. Don't worry.
Can you walk us through that? Because I have heard, I mean, there's always both sides of every argument everywhere, especially on social media. But um, I've heard some people that I have, a lot of respect for being like, if I ran a Bitcoin treasury company, I'd have the cash come in and then I'd buy it. I wouldn't always be buying the top. I'd, space it out more. I'd buy the bottoms, stuff of that nature. What can you walk us through your thought process on that? Because, and even if we leave aside that, um, with some of the convertible debt or with certain instruments, you can only really raise it kind of at the top. And so there was a very specific reason for buying the tops in some of these, like from a technical point of view in the capital markets. If you leave all that aside, what is your thought process on buying the tops versus trying to be really uh, strategic um, and like crafty in like not buying the tops? And what would the advantages be to that? And what would the obvious risks be to that, including the price just kind of running away from you potentially?
Yeah, frankly, Tim, I think that's nonsense. I think the idea of trying to time the market and knowing the exact bottom and top and when to buy and how to get the most, for your money. If that was the case, then you'd be a trillionaire. You'd have the most valuable company on the planet because you'd be able to predict every top and every bottom. And I kind of go back to the famous Bitcoin "I am hodling" meme. The message that hodl actually came from, uh, where it was this guy. If those who aren't familiar, a lot of people think that when we say we're hodling, HODL, that it stands for hold on for dear life. And I know Jack talked about this at the conference, so I'm not trying to steal his thunder, but it actually originates from a message board on Bitcoin Talk, and I think it was 2013 or maybe 2012, something like that, where it was this guy who was having a glass of whiskey and he was talking about Bitcoin, and he was saying, all these traders, they like to tell me that I shouldn't have bought this time and I should have sold this time, and you know what? Um, I'm just hodling. Like, no shit, I should have sold. No shit, I should have bought moments before every buy. And like, it's a great message that stands the test of time, which is why we still say hodling, because if you have a long enough time horizon, and we also say, refer to this famous meme, but also expand your time horizon, lower your time preference. If you're thinking in terms of months or even individual years, that's not the way to think in Bitcoin. And you also have to ask yourself the question, what are you selling for? Where are we moving the capital into? What's going to, over the next decade, uh, outperform Bitcoin? Which, once you ask someone that question, they really struggle to find an answer. And when you're trying to trade the tops and the bottoms, and you're trying to, just get cute, that is how it's really, really easy to get wrecked, for lack of a better word. Because then if that suddenly moment happens and you are trying to time it, you're going to end up with significantly less Bitcoin than you would. Now, when we're working with clients and we appear to be in uh, the foothills of a bull market, where we expect Bitcoin to be going up a lot over the next 12 to 18 months, then just get in where you fit in. Just get in as much as you can. If we were sitting at $500,000 Bitcoin and the market was feeling a little toppy, I mean, my general advice is still to just get in where you fit in. But if you're really concerned about there being like a long drawdown, then you can DCA and ride that all the way to the bottom. But I think they've done analysis. I've seen analysis before where if you compare DCA versus a lump sum buy. I think it was Wicked on Bitcoin X who's done this in the past. You end up with more Bitcoin if you just lump sum, even if you're buying at the tops, even if you just hold on for long enough, which in the grand scheme of things is not that long. We're talking 4 or 5 years, and everyone who's ever held Bitcoin is making money. Like right now, Bitcoin's 108,000. Unless you bought at 109 or 110, everyone who's ever bought Bitcoin has made money, which is like, let that sink in. Everyone who's ever bought Bitcoin right now is in the green. And if you just avoid trying to trade, I mean, that's how you guarantee that you get wrecked, because then, Bitcoin goes down to 75, like crazy tariffs, and there's a world war, and oh my gosh. And then Bitcoin runs from 75 back to 105, and you just missed it. And I mean, I have way too much anxiety to be even trying to do that. So I just buy and hold and stay boring.
Can you talk about the like from the operational point of view, from a prospect walking through the door of Acropolis to them kind of being set up operationally to buy Bitcoin? What's the range, like the reasonably shortest amount of time to average amount of time that you see, just to give people an idea?
Yeah. If a company is coming in fully primed, they know that they want Bitcoin and they want it now, then it's really a matter of just getting them through the KYB process with our different institutions. So we use multi-institution custody. So you're not onboarding with just one entity. You're onboarding with three distinct entities, which is cumbersome in the beginning, but these are the links that we go through to make sure that your Bitcoin is custodied in the safest way possible, because each of these businesses holds a key separately. They each act on your behalf to move the funds separately. So there's no collusion. They're not, sharing information, that sort of thing. So long story short, as quickly as 2 or 3 weeks, we can get you onboarded and into MIC buying your first Bitcoins. But if it takes some additional work, whether that's, you've got three, let's say you've got 3 out of the 7 on the board that are in Bitcoin and they want it, but then you have a couple that are sort of the deciding votes and you need some help to get them over the line, a few educational meetings, a few presentations to sort of explain what the strategy is. It can take longer. So primed and ready, 2 to 3 weeks. If it takes longer, I mean, I think we have clients that we've been working with for a couple of months that still haven't bought yet, but they're larger firms with more skeptical boards and executives. So, yeah, as soon as 2 to 3 weeks.
And I guess that it's surprising to me because it's just different from retail. But I guess it underscores some of almost the messaging and memes and rumors that we see of like, oh, it's going to be a big Q3, and like leave the cycles aside. But it's like it does take days or weeks or months if you're talking about a corporate or a
Oh
government
yeah. And not to mention an investment policy statement. So every company that's public has an investment policy statement that they create in tandem with going public, which essentially clarifies what assets they can invest in as a treasury. And for the vast majority of companies, unless you have a Bitcoin strategy already, you're not allowed to buy you're not allowed to buy a digital asset or a commodity. So these investment policy statements need to be amended. The boards of directors need to be online. There's a lot of work that goes on behind the scenes. And even anecdotally, when I was on the treasury team at eBay, and again, I did not agree with this, but they acquired an NFT company, and this NFT company had some digital assets on the books that eBay needed to account for. So they said, Mason, you're the crypto guy, even though I'm the Bitcoin guy, but they said, you're the crypto guy. We got these assets that we're acquiring, like help us get onboarded with Coinbase. So I was actually the one that onboarded eBay, the entity, onto Coinbase for these assets. And that took forever. And this was during the bear market. I think Bitcoin might have been 30, 40K or something like that at this time, or maybe even 20. I forget when the exact time was, and I'm a very organized person. I was on top of the documentation requirements and getting the right people, and it still took, I mean, I feel like it took at least 6 weeks to get onboarded with Coinbase, the biggest name, the biggest business when it comes to businesses holding digital assets. It's not an efficient process. When you're onboarding a business, there's a lot of steps. They want to know about the ownership. They want to know about the type of entity. They want to know about the balance sheet, various things. So it takes longer than an individual to just, download Cash App or Strike or River or, insert best Bitcoin exchange here. But yeah, it's across the board something that businesses deal with.
Got it. I guess I'll just throw it over to you for any final thoughts, and where people can find the resources. I know you mentioned it a little bit ago, but yeah, just kind of maybe we'll wrap it up. Really appreciate your time. We're well over an hour, probably closer to 90 minutes by the time we kind of wrap everything up. But yeah, I appreciate the time because I think we live in such a world of like scrolling Instagram stories and like the 7-second clips, but like I feel like, call it 90 minutes that we've spent together, and like it's a good overview, and like we definitely covered some topics, but I mean, and I guess that's what presentations are for, right? That you've mentioned. Like we could spend 8 hours just live streaming, walking through like all of the papers on a high level, probably that Acropolis has compiled and published, and we wouldn't even be necessarily getting into like any philosophical arguments. We'd still just kind of be scratching the surface. So, yeah, appreciate your time. Appreciate
Yeah.
all the good work that you guys have done and are doing over there. And yeah, if you want to speak to any of that as far as just like the amount of resources and anything else you want to hit on, I've been very impressed with like, wow, it's must have taken a lot of time to put a lot of this information together.
Yeah. Well, first of all, thank you for having me on. I mean, you're the hardest working man in Bitcoin, everyone knows. And you definitely created the orange tie trend. I want to give you that credit. It would be great. I think one day, Tim, here's an idea for you. You should do like an all day stream. You should do like a 24 hour. You should call it a Timathon or something, or maybe do it for a week and see how long you can get folks coming in like a revolving door talking about Bitcoin. And this has flown by because it's just been as if we were having the conversation. I mean, we talk like this pretty often, me, you, and Chase, and figure out, we just talk about what's going on in the industry in the Bitcoin space. So happy to do it publicly so other people can benefit. And yeah, I mean, I'm really passionate about Bitcoin. I'm very happy to be working in this industry. I never thought that I would be able to do so early. That was the reason why I joined eBay. I just didn't think the market was mature enough. I thought I was going to have a career in tech for, 10 years before I got to work in Bitcoin. So every day I wake up and I'm just grateful to be able to work with guys like you and Chase and Glenn and all the guys at Early Riders and, everyone that we have on our podcast. It's crazy. We've done almost 50 episodes at this point of New Foundations, and um, we're starting to have my heroes on. Like, we've got Parker Lewis and Michael Goldstein and Eric Semler and Dylan LeClaire and you and Dan and all the guys, Adrian. Like, the conversations that we get to have is just awesome. So I'm happy to do it continuously. But if anyone wants to, if they have a business, again, we started working with smaller private businesses. We've since moved up market to mid, large, and public. So if you have a mid-size or a large size private business, or if you're working at a public and you want our help, please reach out. You can feel free to send me a message here, or you can just email me, mason@acropolistreasury.com. Acropolis is in the business of creating long-term relationships and helping companies last forever. I don't remember who said this. I think it was an entrepreneur, but eventually every company fails. And we're wondering if maybe Bitcoin can allow companies to never fail. If you capitalize early and you stick to the principles and you lower your time preference and that permeates through your business, I think maybe you'll be able to have a business that lasts forever. So our revenue model is, we like to be transparent about that as well, is directly in line with the growth of the company's Bitcoin treasury. So we take 96 bips once a client gets after up to 5 million in AUM. We do a custom retainer depending on the level of service required. But then after 5 million in assets under custody, we just start taking bips, and we provide everything inclusive. So we do the custody, the accumulation, the strategy, the investor relations help, the accounting help, the capital markets help. It's all in that 96 bips. And as your Bitcoin treasury grows, our revenue grows, your firm creates more value. We're all, in theory, winning here, which is a really unique business to be in, because a lot of times businesses feel like, the one guy's making a profit, the one guy really needs it. But here we're in the business of creating long-term relationships. We're in the business of trying to make every company last for as long as possible and hopefully forever. So yeah, if you're interested, please feel free to reach out and keep on supporting Tim, because Tim does great work here with his Bitcoin Treasury show. I don't know how many podcasts you've done at this point, Tim. How many have you done? Do you know? Do you have a number on it?
Hundreds. The Bitcoin
Hundreds.
Treasuries podcast is in the 130 range. But
Wow.
that doesn't include anything with on-ramp or anything with True North or beyond. So yeah, we're in the hundreds, but I'll leave it at that. Probably closer to 1,000 by the time the year wraps up with some of the stuff we have cooking. So it's going to be, just different appearances and different opportunities. But yeah, thanks everybody for tuning in. 1,405 people on the live stream right now. Is that surprising to you, or about what you thought?
That's more than I thought. I haven't looked at it this whole time, so I don't even know how many people were watching. I see a few of the comments. Shout out to those of y'all that are commenting, especially J64. You got to meet him in Vegas in person, so that was cool. But yeah, I mean, it just shows that, the money is broken. People want Bitcoin. People need Bitcoin. Companies need Bitcoin, and they're curious about how to adopt it and what's the best way to move forward and who can help them. So it's a sign of the times, and I'm honored to be here. And hopefully you learn something. Hopefully we can help you if you need it. Feel free to shoot me an email or a message. But yeah, this has been fun.
Absolutely. And not to make this too much like the Ice Bucket Challenge, but would you nominate Glenn Cameron as the next suspect for us to have on a live stream? I know we've had Chase and now yourself.
Let's do it. I would say Glenn is the second hardest working man in Bitcoin. He's actually taking his first vacation since I've known him for over and been working with him for over a year now. So It might have to be when he comes back, but yeah, let's get Glenn on here and some South African charm and talk about his journey of orange pilling the first pension in the UK, and what he's seeing from more in the weeds of the companies that we're working with. So, Glenn, if you're listening, we got to get you on.
Absolutely. Well, Mason, thanks again for the time, and we'll see you